you need motivation and inspiration to get you off the couch and boss up? We've got you covered. Welcome to the Build or Destroy podcast. Self-improvement, education, business, relationships, financial literacy, investing, and doing for self. Let's do this. Here's your host, Anthony Barber Jr., a.k.a. The Builder.
What's up, good people? It's your boy, The Builder, once again, back with another episode. And in this episode, we're going to be touching on something that a lot of people have asked about, and that's profit taking, things of that nature. When to do it, when do I do it? The answer to that, to keep it simple, is it's up to you. But I will give my perspective on things as it pertains to that moving forward. So here we go. Basically, the way I approach things is in bites. You know, like the old saying goes, like, what's the best way to eat an elephant? One bite at a time. That's the best way to eat an elephant. And that's how you got to look at, your overall process is one big elephant. And in order to devour this thing, you got to take small bites. You can't try to eat the whole thing in one bite. And I think a lot of people get caught up in compare and contrast. They try to, I'm not going to say compare, just blatantly compare themselves to somebody else, but we live in an internet society where people are constantly in view and have access to, millions of other human beings and what they're doing or what they think they're doing. Nobody really has a 100% insight on somebody's life unless they live with that person. Let me just say that first and foremost. Most people only show you what they want to show you. Some of us are more transparent than others. Some of us share a lot of, more personal parts of ourselves than other people do. Some people go out their way to try to assist people and try to interact with people as much as possible and, get feedback, whether it be positive or negative, doesn't matter. Point is, the way that I usually approach things as far as profit taking is I have short-term goals and I have long-term goals. And let's say a short-term goal for a new investor, somebody that's just new in the game, it's all predicated upon how much capital you start with, right? And it's not that you need a certain amount of capital to get started. It's just that when you have a certain amount of capital at your disposal, you have to be just as cautious with $100 that you do with $100,000. I would probably argue and say the person that has more money to invest actually should be even more scrutinizing of the process than somebody with less money to invest. That's just my personal perspective on the matter. And I say that because, your eyes can be bigger than your stomach. When you have a lot of leverage, when you have a lot of money to play around with, not that this is a game, but when you have a lot of money to use or at your disposal, aka leverage, you can get beside yourself. It's like Thanksgiving dinner, it's like I can have anything I want, it's like that doesn't necessarily mean you should just load your plate up and dig in. You can get a stomach ache that way. stock market investment of any kind is the same thing. You don't want to overdo it. You don't want to overextend yourself. So I have short-term goals and I have long-term goals. So like if I start, I treat $100 the same way I would tell a client that had $100,000 that was just getting into investing. And believe it or not, it's a lot of people with a lot of liquid capital that never really invested in stock or crypto or anything. They're just now getting in the game. So I do consultations and mentoring and coaching, all the time with people that like are like totally green, like, and they're like, the person with 100,000 is just as nervous as the person with 100. It never fails. It's quite interesting to see actually, but I always start with short-term goals, and I always make sure those goals are like realistic. So the person with $100, like I would tell them, focus on, percentage, not necessarily focus on money, because it's a law of averages, so it's like you're at a disadvantage because you don't have a lot of leverage that allows you to have a substantial amount of shares. So it's like it's a couple ways you can go about it, and one way in particular is to find really like low floating stocks, like the OTC, is a good medium for people with not a lot of capital. Like not everybody can just go and buy, 500 Tesla shares or, 500 Apple shares and things of this nature. You can start slow, but to most people I start with, they're not like, they don't have an old school mentality. And I talked about this in a previous episode. Like there is two different mentalities. There's a old school mentality type of investor, and there's a new school mentality. And the new school is kind of ruling things right now. It's a lot of young people. It's a lot of first time investors jumping in the market, like with that new school ape mentality. And they're more emotionally driven. So I have to like really beat logic into a lot of people's heads, where there wasn't any at before. So I stress the importance of a short-term goal. So a short-term goal would be to just focus on percentage gains, 5, 10 to 20%. If you can get 5%, cool. If you can get 10%, even better. If you get 20%, hell, that's rock star right there. Like, and then you just start over. So if you have $100, your short-term goal would be to make 5% on that $100 by investing it in a low-floating penny stock. And everybody has their own, scope of what a low float is. The float is basically the outstanding shares, or to really be accurate, it's the restricted shares, or the unrestricted shares. I'm sorry. Of a company, and that kind of shows you the actual number of shares that are available to trade on the open market. Me personally, I try to go for companies, especially like in the beginning when I didn't have a lot of money to work with. I'm not looking for a company that's super liquid, that has like a gajillion shares outstanding. Not that I do now, but I'm just saying, and especially in the beginning, like I try to keep it under, at the most when it comes to a penny stock, especially I try to keep it under anywhere. My range is like my sweet spot is like under 1 billion shares, obviously, but they're getting harder and harder to find those because a lot of companies dilute, and their share count increases, so it's kind of hard to like catch them before they do that. So like, to be realistic, like the range would be ideally 500 million shares outstanding to 5 billion, just to keep it real with you. Like I've seen plenty of companies with a 5 billion outstanding share count go well into the dollar plus range, no problem. It just depends on volume and hot money and a lot of different factors, but it can't happen. But I try to just be realistic. So if I got $100, I'm looking for like sub penny, low floats anywhere between a $500,000 to $2 billion outstanding max. Because I want it to move. I want to get a nice swing trade out of it, or a nice momentum trade out of it. Because those stocks move a lot easier. With low volume, and they move extremely easy when the volume comes in from a catalyst or things of this nature. So especially somebody with a small amount of money can do a lot of damage real quick and increase their portfolio. And another thing, writing plans down. This is something else that I stress to my clients, people that I consult with, and that's writing plans down. You should always write plans down. Write a game plan down. Have a notepad. Have one of those little pocket spiral notebooks on you at all times. And the reason I say that is because it's more intimate than using your phone. And it holds you accountable, because you not only have to have the notepad on you, but you have to have like a pen on you, or a pencil or something like that to actually physically write it, And a lot of people that would jump down my throat and say, well, I'm not doing all that. That's too much work. It's like, that lets me know what type of mindset they're in. Like it's more of an exercise than of labor, because investing is a labor of love. So it's like, it's an exercise. It's a mental exercise to like see if this person is actually committed to getting better. Because if I say, oh yeah, just use your cell phone to take notes, people are going to say, oh yeah, no problem. But they're not going to do it, because believe it or not, like, they won't do it 9 times out of 10. So it's like, if I tell you to get a notepad for $1 at the dollar store and a pack of ink pens, for a couple bucks, that's an investment right there off the top. So if you can invest $5 in yourself, then I already know that you're not ready to invest in the stock market. See what I'm saying? It's literally that. It's that simple of a flip of a switch in the brain. And when I break it down to people like that, they're like, "Oh shit," like, yeah, you're right. It's like, dog, $5. Put $5 into yourself. Like, are you fucking kidding me? Like, you want help to learn how to trade, but you can't even invest $5 and take a few minutes out of your day to like take some notes. Take some quick notes down on what you're doing right and what you're doing wrong. Secondly, and this all plays into the short-term goal. So it's like, you have $100. Your short-term goal might be to make another 100, to double it, basically make 100%. Make $200. Okay, cool. That's your short-term goal. So how you gonna get there? To get $100, that's 100%. So you can get there any way, a number of combinations, 100 different combinations. You can get there 1% at a time. You can get there 5% at a time, 3% at a time, 20% at a time, 30% at a time. It just depends on the nature of how you trade or what you invest in, and the market climate and what's moving and what's grooving. It just depends. So you have to be mindful of that, and that's why research is important. So you have to know exactly what your exit is and be totally unemotional about it. Because remember, you're behind the 8 ball. You don't really have a lot of money to work with. You're the small fish in a big pond, or you're the small fish in the ocean, I should say. At that point, if you got $100 or something like that, you're just trying to make a double, and then compound that into another double, make 300, compound that again, make 400. You can slow roll it like that until you get 1,000. And every dollar you get over your initial 100 is to the good. So you have to look at it like that too. You can't be pissed off when you miss out on 80% gains because something you sold kept running. You're not in it for that, not yet. You don't have leverage to where you can sit on your hands and say, yeah, I'm gonna take a little bit of profit here, and then I got so much house money. You don't have that much leverage. You can't buy that many shares, okay? So you have to really be a sniper about it in the short term. Another thing, it's really good to track your wins and losses. And this goes back to writing down plans. So You have to be a strategist when it comes to like getting in and out of your trades, and you have to be unemotional. So, like I said, focus on the double up, but you have to, write down how what you're doing. So, like, I'm investing in XYZ stock, right? The float is X. The authorized share count is Y. The company sector is this. This is the 52-week high. This is the 52-week low. This is what my buy-in price was, and this is what my exit has to be to get profit. This is what I'm aiming for. This is what I'm aiming for on the 5% low range, and this is what I'm aiming for on the 20% high range. You could, write a little quick game plan down for yourself like that. Just give yourself a rundown of the company and really get familiar with your company, and focus on that. Focus on it. So when shit's not going right, you can cut losses and regroup. You're not just stuck. Because, like I said, you don't have the leverage available to where you can be sitting there diamond handing something for a long period of time, and you can afford to just let your money burn away or go down to damn near nothing, unless you're prepared to do that. And that brings me to another point. Like, don't invest shit that you're not willing to lose, okay? Like, everybody lost money in this game at some point, even the greatest. Like, the greatest investors have lost money, have took losses. But the only thing about it is they don't tell you about their losses because when they win, their wins far outweigh their losses. So they never bother bringing up their losses unless like somebody directly asks them about like, hey, what's your greatest loss or whatever. Then they'll tell you. But the big dogs in the industry don't really talk about losses because they know that it's going to happen. But the person that is just getting in the game, your whole mentality is panic and worry, and you're emotionally driven most of the time. No matter what you say, like you're always in like flight mode. You're not in fight mode. You're not really in it for the long haul. You're not ready to go 12 rounds yet. So don't act like it. Don't kid yourself. So cut losses quick. Be prepared to do that. And if you're willing to lose it all and you have a lot of conviction in this particular investment, then have at it, because it could turn and you could get those gains that you were looking for. You might have to deal with a little bit of pain. Just FYI, if you're willing to deal with the pain, cool. But overall, like, what's your plan after profit? What's your plan? Are you trying to compound and make your first 1,000? That way that can be kind of like a mental checkpoint for yourself. And, are you trying to prove to yourself that you can do this? Because a lot of times like that checkpoint, like let's say from 100 to 1,000, that might be a mental checkpoint for somebody to prove to themselves that, okay, I can really invest. I can really trade. I have the composure. I have the poise to do this. For other people, it just might be to get a quick buck, to pay a light bill or something. And that's cool too, because investment can, it's a quick vehicle. It's the quickest vehicle you can jump into to make some money, get in and get out, things of that nature. So you can leverage it for that too. Just know what you're getting into also. And I would say the meat of the situation is having a long-term goal. So like, what's your long-term goal? Short-term might be to compound that $100 to 1,000. Okay, what happens after you get to 1,000? You can keep slow rolling it and make another 1,000 and another 1,000 and another 1,000, and you can just keep that. You can play it conservative like that your whole investment career, and there's nothing wrong with that because profit is profit, right? You're making money. That being said, you don't want investing after you get a certain amount of capital. I'm gonna just say this: after you get a certain amount of capital, it's gonna behoove you not to jump into other types of investments, alternative investments. So just keep that. That's more of a keep that in the back of your mind scenario. But just know, it's gonna come a point where like you're gonna have some significant victories, and what got you there won't get you to the next level. Like, so, and the next level is like financial freedom. The ultimate level is financial freedom. So at some point in the journey, especially if you're having significant success, you're going to start looking at the world a little bit differently. You're going to start looking at your family like, damn, you know, you're going to start looking at your kids, your wife, your spouse, your significant other, what have you. Like, man, I want to spend more time with this person. I want to do this. I want to travel. I want to learn a different language. I want to learn martial arts. I want to learn how to play that instrument that I couldn't afford to buy years ago or when I was a kid and my parents couldn't afford it. Or I want my son or my daughter to be able to do this or that, because I never got to do it because my parents didn't have the funds, and now I have the funds, or I'm getting close to having the funds, and I'm starting to, like, your mind is going to expand. Once you keep going forward, you're not going to be able to go back. That's what's scary about investing to a lot of people. Like, the better you get at it, the more success you have at it, the more you seek, the more you want. And the only way to get that is to stay grinding and keep educating yourself, and to realize that the shit ain't gonna get no easier, because once you get the stock thing down, that's just one little thing. That's like a crumb compared to like all the different types of investments, equities, assets, real estate, land, investing in gold and silver and rare metals and foreign land, Airbnbs and small business creation. It's all types of long-term things in this. So, like, keep that in the back of your mind too. It needs to be there, because trust and believe, like, when you have a plan for after you profit, these are going to be things to keep you grounded, because you're going to say, okay, cool, I finally got X amount of money. I know exactly where I'm putting it, instead of you getting X amount of money and you're saying, holy shit, I don't have a plan for this money. What the fuck am I going to do? I don't have a plan. I don't know where to put it. I don't know. Do I reinvest it? Do I buy a house? Like, do I buy a car? Do I buy some bullshit I don't need? Like, and most people do that. They buy bullshit they don't need, because it's like they're staring at more liquid than they ever had before. And that's cool. I blew a bag before on some trivial shit that I didn't really necessarily need. I bought foreign cars and things of that nature and stuff, but I wanted it though. Like, I bought one of my dream cars that I wanted, that I always wanted for years. But I waited before I bought it, but I still got it. I still copped it though. So, and I could have bought another real estate property. You know what I'm saying? Like, in hindsight, I could have did a lot of things with the money, but it's like I chose to buy a car. It's like, okay, cool, I bought a car. I know it's a liability, yada yada yada. It's like, yeah, but every now and again, hey, those are the things that build you. Those are the things that give you hindsight and perspective. So it's good. Sometimes it can be a blessing in disguise. It's not all shit. You take shit, and some people take shit and they run from it because it smells and stinks. Other people use shit as fertilizer. So it all depends on how you look at it and your perspective on things. So just all in all, have a plan for after you make profit, no matter how big or small it is. Just have a plan. I stress that, and I can't stress that enough. So that was it, man. Have a plan. Peace.
Thanks for listening to the Build or Destroy podcast with your host, Anthony Barber Jr., a.k.a. The Builder. We hope you enjoyed our deep dive into all the tips and tricks you can use to boss your life up. If you're interested in expanding your mind and reaching your definition of freedom and how these ideas and views can be applied in the real world, tap in with us next week. As always, you can head over to www.builderslsb.com to cop some motivation, dope merch, and sign up to our email list. And don't forget to check out all the links and resources in the show notes. That's all for this episode, folks. And as always, boss up instead of laying down.